This is a guide for buyers and sellers as to what a buyer's market is. Hey Gigi, when were you born?
I was born on May 17th, 2012.
May 17th, 2012.
Yeah.
It's almost your birthday. Happy
Yeah.
birthday. And April 2012, just before you were born, was the last buyer's market. We're about to dive into what that means. Hey there, Christian Walsh, real estate agent with Wire Associates. We're helping buyers and sellers make the best decisions in this crazy market. And with all the talk about a possible housing shift, maybe even a housing crash, we need to let you know actually what a buyer's market is. Some of you whippersnappers don't even know what a buyer's market's like. You haven't seen one before. And those who have, you probably forgot exactly what it means to have a buyer's market. And a lot of this advice and a lot of what we're going to share comes from the fact that we started out in real estate just right around the global financial crisis, and we got to deal with one of the most extreme buyer's markets in history, and then it quickly shifted to a seller's market, and we've been in it ever since. So if you're ready to find out what to expect in a buyer's market, hit that like button. And let's get started. First off, what is a buyer's market? Well, one popular definition states that when the level of inventory reaches 6 months or less, it's a seller's market. 6 months or more is a buyer's market. So using that definition, you can see that right now, as I'm shooting this, we have around 1.4 months worth of inventory, which means for every property to sell on the market, it would take about 1.4 months. That is an extreme seller's market. It's at record low levels, you can see. Same thing last year during that crazy spring buying season, we saw that. But we need to back up, go back in time. And this tool we have here goes back 13 years. It's as far as it'll go. And you can see that when we get closer to 2012, in fact, when we get to April of 2012, that was a balanced market. That was 6 months of inventory. Since that point, so May 2012 on, once Gigi was born, it has been a seller's market, and it's become a more extreme seller's market. So you literally have to go this far back to see the last buyer's market. And you can see it got to be an extreme buyer's market. During March of 2008, it hit over a year, almost a year and a half worth of inventory. So that's an extreme buyer's market. Another important statistic to tell whether it's a buyer's or seller's market is how quickly homes are selling. So you can see that right now in this extreme seller's market, it's 8 days or less. So less than a week, homes are listed and sold. And we've seen cases where they're selling in less than a day. They don't even get to have an open house and the home is gone. But back in the global financial crisis, if we back up time, you can see 90 days. As a seller, you could be sitting there for 60 to 90 days waiting for an offer. That is the difference in a buyer's market. There will be more time to make a decision for the buyer, and sellers will have to be patient and wait for the buyers to come along. In an interesting twist, sellers will hate cash offers and want offers with financing. And why is this? Well, anybody who's making a cash offer is going to expect a big discount. So it could be 20 or 30% below list price in a buyer's market. Sellers will not want those cash buyers to buy their properties, and they'll embrace those who are financing. Remember things like inspection contingencies, appraisal contingencies, home warranties being paid for by sellers. That will all come back in a buyer's market. So there will be more time to do the things as a buyer you should do for due diligence. You won't have to rush, and you will have an inspection contingency period to do the investigation. Appraisal contingencies will be back, and they'll be more important than ever, and I'll dive into that in a minute. And sellers will pay for things like home warranties. They may offer to pay for other things, such as buyer closing costs. It has been a long time since I've seen an offer accepted where a seller is willing to cover some of the costs for the buyer. That will come back in a buyer's market. And as interest rates go up, there's a chance that sellers will actually pay to help buy down the rate for buyers. They'll be willing to pay a point here or a little extra so the buyer can have a lower rate. I know it sounds almost too good to be true, but those are the things that happened last time, and there's more. And that newfound appraisal contingency we just discussed, the number that it actually appraises for will matter again. And what will happen is if a home does not appraise for contract value, let's say it comes in low, which could happen in a decreasing market, the seller is going to have to potentially negotiate down to that number. In this seller's market, they've been able to either have no appraisal contingency or move on to the next buyer, and that buyer is more than willing to pay above appraisal. But in a buyer's market, that will not be the case. And if the seller isn't willing to come down, that buyer will cancel and move on. And remember, you have your inspection contingency, and you may find that the property needs some repairs. In a seller's market, you often don't get to make a request for much, if any credit or any repairs. In a buyer's market, this will be an important phase in the process, and you'll find as a buyer that you'll have much more leverage in getting the seller to cover certain repairs or give credit. For example, in Southern California, where termites are a big issue, we'll find that some sellers will give a credit for termite repairs in a buyer's market. So that's a dramatic change from what happens right now. How about setting the price for a home when a seller is about to go on the market? Well, there will be more competition because there's going to be more homes for sale and there will be less demand from buyers. So sellers are going to have to be very careful in choosing a price. No longer will it be how much more can I get than my neighbor just sold for across the street. It'll now be, hey, I hope I can get as much as the neighbor sold for across the street. So it'll be very important for sellers to be strategic in pricing, to stay on the lower end of market value. What happened in the previous bust is, unfortunately, some sellers, it was like catching a falling knife. They would drop their price, but they were always a little bit behind. And as we say, you can't sell a house without an offer. And they weren't able to get one because their price was never quite in alignment with the market until it had been on for way, way longer. One more important point, and we've seen in this crazy seller's market that just about every property was getting multiple offers, even if it had some hair on it. And by that we mean it's near train tracks or backs up to a freeway. Those properties in a buyer's market will sit much longer and will require much more of a haircut when they have hair on them. The other example would be properties that have issues with tax liens or some sort of title issue. Those are going to be very difficult to trade in a buyer's market. But it's not all doom and gloom. There will be some properties that do still receive multiple offers and get into bidding wars. That's what happened in the previous bust. That tends to be a property, obviously, that's well priced and turnkey. Those properties tend to do well, especially if priced well. The other ones would be bank-owned properties. If we start to see a flood of inventory that's bank-owned, the lenders tend to price those aggressively. Don't think that every property that hits the market during a buyer's market is going to sit there and is going to get negotiated down. Some still will get bid up and go quickly. How are you going to know when it's a buyer's market? Well, number one is subscribe to this channel and watch these videos. Number two is subscribe to our free Altos research reports. We have a link below so you can do that. You can literally track any market in the United States and you'll be sent weekly reports on exactly how healthy that market is and when it's gone from a seller's market into a buyer's market. You'll also be subscribed to our free weekly email newsletter where we're going to keep you up to date on exactly what kind of market we're in. Share your buyer's market stories if you have them, and if not, what you expect a buyer's market to look like for you. Make sure you check out this playlist to stay up to date on what's going on in the housing market. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we want to hear from you.